Hey guys, welcome to another exciting weekly update on my portfolios on my road to retiring by 40. So, if you guys were investing in the tech industry this week, your portfolio is probably in the red. So, this week was not good for tech stocks, and the reason behind that is there was a firm that was pumping up the price of tech stocks, essentially, and the bubble burst. So, if you saw last week's episode where I was saying that we weren't in a tech bubble, I guess I was wrong because SoftBank was pumping up the price of Apple, Tesla, Amazon, probably a whole bunch of tech stocks, and they were inflating the prices, and then the market kind of adjusted for that, and it adjusted hard. So for Apple, for example, this week it went down 6%, which doesn't seem like a lot, but it was also in an upward momentum. So it dropped around, it dropped actually, it didn't drop around 134. So the 52-week high for Apple is somewhere. Okay, I guess it's not. You can't see it here, but it was like $137. So it dropped from $137 somewhere around here to $113 in the lowest for this week. Now it did bounce back uh slightly end of day Friday, but it was still pretty bad for all of tech. So I think the one that got hit the most was not Apple, it was actually Tesla. And yeah, whoever was investing in Tesla, I feel bad. I was doing some Tesla plays in the middle of the week, and I made some profit, but then that profit just went away with the crash. So it went from I think it was higher than 501 as well, and unfortunately I can't see the 52-week high, but it was, let's say it was around $500 at its highest. It went down to 392, and actually lower than that, 378, almost $150 lost in a week, within a week. That's pretty crazy. Imagine if so one just one share. If someone bought at the high one share and it went all the way down to its low, that's going to be like $150 in one share, for one share, just gone. People lost a lot of money. So, uh, who was to blame, right? It's SoftBank. They were the whale that was buying up a whole bunch of tech stock and inflating the price. I think they were saying since for a month. So uh, if you notice that the prices were going up for tech in particular, then then you were right. Like you can see that the prices were just getting higher and higher. A weird increase here, a weird increase there, and even with I think the stock split happened and was announced around here, so that's um, understandable. But like right here, there was no news. I don't think. So, anyways, there was a whale, and they were manipulating the market, and then the market kind of adjusted. Um, Hopefully, Tuesday, since the market's closed on Monday, we go back to a little bit of normalcy, since we did get a pretty big correction in most of the tech industry. Let's see if I have, for the most part, I have a list here that's it's not all it's not all tech, but okay, it's not all tech, but um it's primarily tech. So I don't like the interface here on web, but you can see a lot of red here, right? A lot of companies were down just in general, and yeah, hopefully you guys haven't losing a lot of money. We'll get to my portfolio soon, but I want to go into the I want to go into my misadventure here this week. So the week started off pretty strong, right? And then I made a nice little Tesla play here. Made a decent amount of money, sold it, and then I noticed Tesla going down again, so I bought a lot of shares. It got really low, then I bought more shares, and it went back up to my highs. Basically, I made a decent amount of money here, just through Tesla, right? So, first time buying Tesla when it was down, and then it went down again, and then second time buying Tesla, selling it here, and letting it ride. And then I think I had a decent amount of Apple stocks, so it went down because of Apple, and then I bought more shares because it was going down, and then it really went down. So my this whole week was me buying the dip, making some profit because it was the this week's stocks were going down, but for the most part they were bouncing back up really fast. So if you were cost averaging down, you lost a lot of money, yes, during the dips, but you made back your money back and then some really fast, which was great. But now we're over here in the bubble, and it got a little bit more uh, flaky, to say the least. So it was around here. Yeah, so this was Friday. Uh, this is where I was kind of doing a I was securing my losses using options while buying a lot of Apple stocks. So since this is Friday, it'll all be here essentially. So I started the day, and then Apple. So in the beginning of the day, Apple was actually going up, um, as you can see here, right? It was going up, and then it just didn't. It went back down. Thursday was a big dip for Apple, and then Friday, the day started with Apple being positive. So all the shares that I was buying on Thursday were kind of making money for me, but then another dip happened. So what I did was I kept buying a lot of shares of Apple, but then around here I bought a I was still buying shares of Apple, but I was buying I bought a put option, and within the money. So I don't know a lot about options, so I'm not gonna speak out of turn. But if very basic put option explanation is that if the stock goes down, you make money. So I was playing both sides where if Apple went down, I would make money, but I was also buying the dip. So if it was going to, if the more it goes down, I was losing money, and then the put kind of covered the losses because I was making money. I'll show a little bit of what I mean in a second, but that did help me minimize losses, and for a while I was actually gaining. So here, not gaining money, but I was breaking even with the option and all the shares of Apple that I was buying on the dip. In the end, though, I wish it stayed here. I made a decent amount of money in that day just buying options, buying put options, and buying the dip, just for Apple, just one stock, Apple, for the most part, and that was working out for me until uh, after hours where I lost a bit of money. But anyway, so here's like a quick photo of what I'm talking about. So I would buy puts that were in the money, so it's easier for me to make money, but they're more expensive, so it's also a little bit more risky. But I would buy a put if the stock Apple went down, this option would make me money. But I was also buying the dip, so the more shares I was buying while it was going down, the more money I would lose because the shares would become less valuable. However, with puts, you make more money because it's a riskier investment, and since I think at this point in time, Apple was around 113, either 113 or $112. So just Apple being $3 away from the put value here made me $464, or about $232 per put because I bought two puts. So I'm not good at this yet, but this is a very valuable and powerful tool that you can use to buy stock that's going down, but also minimizing your losses. I really want to get better at this because you can see here with the put as it was going down, I made close to $500, but also while it was going down and I'm buying the dip, I'm losing about $500. So they're canceling each other out. But um, when it was going back up again, I sold the put and took the profit. I don't think it was 464, but somewhere around 464. And then, of course, since it was going back up, Apple was my shares of Apple, they were increasing in value. So at this time, I was breaking even, or about breaking even, right around here. But um, when Apple started going back up, I was gaining money. I made $250, and later on, almost $400. So I'm not good at this yet, so I can't really talk too much about it. But it's definitely something I want to research into and kind of get better at, because not only are you canceling your losses when you're buying at a loss, essentially, but you're also potentially making more money out of it. Anyways, that's enough of me trying to explain things that I don't fully understand yet. Let's get into this week. So, this week was my second highest loss that I've recorded, and it's my third loss that I've recorded. Um, I mean, overall, though, it wasn't that bad. It could have been worse. It definitely could have been worse, since I primarily invest in tech stock, and everything went down in my portfolio, at least. So let's see. So in Robinhood, I did make about 400-ish bucks this week, but on my IRA, I lost about 500 bucks, which isn't good. I did start. I started cost averaging down in this account with Apple. I really do believe in Apple. So primarily in my IRA right now, I have Apple and QQQ, and that's it. And we'll see if that works out, because usually you want to diversify. However, I do think Apple is a very good company, and QQQ is down right now, so I want to buy while it's down. My 401k took a hit too, and since I don't really have control of where my allocations go anymore, it's all through a third party that I might change, because they just don't do a good job, I don't think. I lost about $400 here as well, which isn't good. So I guess my Robinhood kind of offset the loss of my 401k in that essence. You might also notice from last week's video is, so this week was a little bit weird for me, besides the tech stocks just going down. Every single one of my accounts was acting weird this week. So on Monday, I couldn't trade on Robinhood for the first, I want to say, like half day. I couldn't trade, I couldn't sell, I couldn't buy. With my Vanguard app, my Vanguard account, I couldn't even log in. And then when I could log in, I couldn't trade. So this was also on Monday. Then my 401k last week was telling me that I had a pending contribution, but it turns out that, so I thought it wasn't in reflected yet, right? But it turns out it was reflected, and it was just giving me a pending contribution that was false. So instead of the contribution being on this week, it was actually that this week. Um, E Trade, actually E Trade was good. The E Trade is what my company uses for their stock buyback options. And this week it actually went up pretty significantly. I also got some dividends from my company. So my company's stock offers a pretty high dividend yield actually. And so right now I don't have a lot of stock within the company. I have about 30 shares. But I made 14 bucks this quarter because of those shares, which is, I mean, it's not a lot, but I mean, it's something. Let's see. I think that's all I want to show. It was a crappy week. I'll be honest. It was a pretty crappy week, and hopefully next week isn't that bad. Although Monday the markets are closed, so I'm not happy about that. I kind of want to go back in the market and make some more money. However, I'm not able to on Monday, and I'm still on track. I have a pretty solid uh, weekly average that is higher than my target still. So uh, it's a bit of a setback, but we'll get there. All right, guys. See ya.